what today we're talking about is tax day is coming. So April 15th is coming. I know for most people, it's not a fun time. But I think the people that are prepared, that have strategy in place, tend to actually look forward to the day because they emphasize their tax strategy. It's something that they're working on year round, not just 1 month, not just 2 weeks before, but something that they're proactively planning, which is one of our core processes here. So we're joined by Noah and Peter, who are our two co-founders of WealthThrive, and we'll go ahead and get started. I'm actually still getting registrations as we go in, which is cool to see. But go ahead to the next slide. So before we even get started, there's these talks about WealthThrive. What is WealthThrive? This program, taxes. Everyone knows about tax day, but not everyone knows about what you're supposed to do outside of just paying what the IRS tells you owe. So, Peter, maybe you could talk about what is WealthThrive for people that might never have heard of us, or I see some people in the audience that have met with us before. But what is WealthThrive, and how are we helping people with April 15th?
Of course. Well, thank you, Samir. I will say we're going to focus almost exclusively today on taxes, probably because that's a significant pain point, and especially at this time of year. At a broader level, WealthThrive is a comprehensive wealth management firm, and we help clients with all aspects of wealth management, financial planning, taxes, investments, insurance, estate planning, exit planning, and while we'll talk specifically about tax strategies today, what's important about that is we typically find tax saving opportunities in all those areas. It's not just looking at your tax return that unearths tax opportunities. But specifically in the tax area, we have a tax reduction program, which is shown on this slide. It has three very simple parts: discover, design, deploy, where simplistically we do a very detailed analysis of all your financial data to uncover the opportunities. We then create a design which takes advantage of a number of tax strategies to reduce your taxes. We're going to talk about a number of those strategies today. And then importantly, we help you implement the strategies. That's the deploy phase. This program we commit to complete in 90 days. It probably takes maybe 3 hours of your time over the 90 days, but you can see the results have been really pretty phenomenal. Last year alone, we saved clients on average about $265,000 in taxes. And we had a very cool case where we saved one gentleman $15 million in taxes. So there are just tremendous opportunities out there to save taxes. And today we're going to kind of show you what some of those opportunities are, and more importantly, what the return on taking advantage of those opportunities is.
Thanks, Peter. That's helpful. Let's go to the next slide. So I
So
think we have a unique program, but I think to help people understand a visual, we wanted to put together some real life cases of clients from different states. And Peter, maybe you could talk about why we picked Ohio, New York,
sure.
California, and the importance of
Happy.
this.
So I would say Ohio is a medium tax state. I think the state tax rate, so all these states are going to pay federal tax. Some states have no state tax. Some states have a little bit of state income tax, and some, like New York and California, have very significant state income taxes. So we want to kind of show the range there. So if we look in the left-hand column and we focus on Ohio, uh, if you made $1 million and you didn't do anything but send in the amount of money that your CPA told you to send in, it'd be $397,000. Working with this particular client and applying several of the strategies that we're going to talk about today, that client would have paid $110,000, or simple math, saved $286,000. Importantly, the way these tax strategies work is they're what we call tax equity strategies. This is not some kind of voodoo that we do, which is that you send us your paperwork and we manufacture. Basically, what you're doing is redirecting money that you would otherwise send to the government into taxes into tax saving strategies. So in this case, in Ohio, that cost would have been $210,000 for a first year savings of just under $77,000. A number of the strategies that we use have additional benefits in succeeding years. And so you can see in this case, there was a first year benefit of $76,000, but a savings over the succeeding 6 years of 145. So pretty good ROI, maybe 30% in the first year and 65% over the course of the program. The next two columns basically use the same methodology. What would be your tax if you did nothing? What would be your tax if you use some of the strategies that we use, the savings, what you'd have to invest, and kind of then your net benefit. And what tends to happen, as you can see in the progression from left to right, is that the higher the tax state you live in, or the higher the income that you make, there's actually more than we can do for you. So just some good concrete examples of it's all about redirecting tax money into strategies where you get a return on your investment that's significantly better than if you just sent the money to the government.
And Peter, I know there's a huge benefit in doing tax strategy year over year, but what's fascinating to me is when I look at the first year savings just from doing 1 year, can you walk us through a little bit the emphasis on the savings you're getting over that 6 year period just from 1 year of strategy?
Of course. So one of the strategies that we use a lot is having our clients invest in solar projects. And the reason the benefit continues for 6 years is that under the solar legislation, the depreciation benefit continues for 6 years. So if you think about just kind of a grid in your mind, if I did that strategy in the first year and it carries forward 6 years, and then I do it again in the second year and it carries forward for 6 years, that means in the second year, I'm getting a double benefit from that part of the strategy. And then the third year and the fourth year and the fifth year. So there, and maybe the more general point is all of these strategies we're talking about, they're repeatable every year. This isn't just a one and done. Taxes are paid annually, and we want to help you reduce your taxes annually. So,
Yeah,
maybe I'll just jump in. I want to add, Samir, that as Peter's describing, if you're doing this each and every year, you're not just saving the 76,000 in year one or the 145 over the 6 years, but what are you going to do with that money? Most of the clients that we work with that are entrepreneurs, they're either going to invest in their business, which is going to generate a positive return on investment, increase the value of their company, or maybe they're going to take money out of the business and invest for income, either through real estate, through the stock market. And once you start putting 100, 200, 600 grand a year away in these new saving strategies, you could see how the math would compound pretty quickly and help you accelerate your financial success. So it's not just the savings that you're going to receive, it's the ability to take those savings and make them into productive investments to plant seeds so you have an orchard that's going to bear fruit, potentially when you sell your business or when you hit retirement age.
The other thing, Noah, I see you talk a lot about on podcasts is overemphasizing on strategy, where it's so fascinating because as a business owner, you tend to have strategies for your exit, right? Or strategies to grow your business in certain markets. But something that I think you've seen over your illustrious career is the fact that a lot of people forget about tax strategy, like not implementing an actual strategy on taxes. And when I look at this chart and I just look at the first year savings alone and the idea of doing that year over year, the amount of savings that you have there, how important is that into factoring as a business owner when you're looking at the next decade? You're putting everything you can into this business and you're forgetting about tax strategy.
Well, that's why I think tax strategy can often be the highest return on investment activity that an entrepreneur can pursue. It's great to, we're working right now to develop our Facebook marketing funnel. So we're doing digital ads. That's a good investment. It's going to take us some time to figure out. Last year, we invested, I'm trying to think of what else. We're always making investments in our business, and those are planting seeds to grow the value of our company. But when you're already making money, if you haven't optimized your tax situation,
Right.
those are just dollars that are going out the door that you're never going to get back.